Hello and welcome to Mindset Hustle. This is your boy Moses, and I'm about to bring you an exciting series of lessons on how to trade boom and crash on deriv.com. So this is going to be a series lesson. So today we are going to look at part 1 of this boom and crash trading made simple video. All right guys, so before I dive into the first part of the series, let me take this plug out of the way. As usual, if today is your first time here on Mindset Hustle, do well to hit that subscribe button and don't forget to turn on the bell notification icon so that anytime we release a new video, you will be notified that Mindset Hustle has released a new video. Also, do not forget to like this video and leave us a comment or any question that you have in the comment section below. Without much ado, let's dive into today's video. So just as I said guys, this is going to be a series video. Okay, so in this series, the title of this series is going to be boom and crash trading made simple. Yes, I mean made simple. A lot of people don't understand how to trade this particular synthetic pair on deriv.com very well, and that reminds me, the only broker that trades this pair is Deriv. Okay, so I'll leave a link in the description of this video. Do well to click on that link and register. All right, because there are a lot of clone sites that are out there where people are how will I say, people are scamming people through it. You register and you think you are registering with Deriv, but at the end of the day you have not registered with the company and you end up depositing your fund and you cannot withdraw it. So I'll leave the official link to deriv.com in the description of this video. Do well to click on it and register. All right, so as I said, today we are going to look at the part 1. Okay, the part 1, which is very important, you need to understand. Okay, so in the part 1 we are going to look at the market structure. All right, market structure in terms of trading boom and crash. So when we tend to trade boom and crash, how should we look at the market? Okay, so one of the most important things that a lot of people don't take into consideration when trading in general is structure. Okay, I think let me market structure. Right, please guys, take time to watch this video from beginning to end. Don't forward this video, because if you forward it you might miss an information along the way. So do well to follow step by step. Okay guys, all right, so as I was saying, a lot of people trade but they don't understand what they are doing. They don't understand why the market reversed where it reversed. They don't understand why the market continues from a particular point after a reversal. Now, structure is very important. If you understand structure, you understand how to make proper trades. But if you don't understand structure, you end up always taking trades and being taken out of the market because you don't know what to expect at a particular point in time. Now, boom, crash are the favorite pairs when it comes to synthetic trading on deriv.com. And as I said, I'll leave a link to deriv.com in the description of this video. Do well to subscribe. Just a disclaimer, Deriv is not sponsoring me. They are not sponsoring this video as well. I only trade with them. So I trade with them and they are the only broker in the universe trading these particular assets. All right, so do well to register with them. So let's come back. Market structure is very important. So I'll first of all demonstrate the textbook way of representing market structure, then you look at the realistic way that you need to look at market structure. Okay, textbook will give you a way that you see market structure in. All right, so for instance, let's say market is moving down, up, making a series of highs and lows. Okay, so market is making series of what? Highs and what? Lows in the market. All right, as it goes up, it makes series of what? Highs and what? And lows. Okay, now as market makes this series of highs and lows, it is doing something we call, it is forming something we call structure and breaking structure at the same time. Okay, so market forms structure and market breaks the structure. So at the point in time, that structure that is broken gives you an idea of what the market wants to do next. Are you okay? So let's say we are having this kind of movement in the market. Okay, so we are having this kind of movement in the market, and at each point in time we realize that market is breaking these highs. Okay, as market moves up, it breaks any high that is formed. Any high that market form is broken, and market forms a new high after breaking that high. Okay, now before I continue, if you want to take forex course that takes you from beginning advance to the professional way of trading, then I'm recommending you to take the captain's mastery course. Okay, so what is going to happen is, if you want to join the captain's mastery course, just contact me using my contact information in the description of this video, and I will give you every information you need to be able to join the captain's mastery course. All right guys, it's very affordable but very insightful course. Okay, this course goes deeper and deeper into things that you need to understand in order to be a profitable trader on daily, weekly and monthly basis. Never miss out. As I said, contact me. My contact details is in the description of this video, and we will meet in the captain's mastery course. Meanwhile, let's continue. All right, so as I was saying, we need structure to be able to do proper trading. Now structure gives us where market is heading. So structure tells us whether market is in an uptrend or is in a downtrend. All right, so here you can see that as we move, market is performing what we call series of highs and lows. Series of highs. Let me use caps. Highs and and lows. Okay, series of highs and lows. All right, so the lower point here, the lower point where market turn over here is is the high at that point. Okay, then we have another high that is formed above, another low formed above, and another low also formed above here, another low also formed above here. Okay, so you can see that. Now we have the highs also forming in the same manner. Now you should know that anytime a high is broken, you should be expecting that market will make a pullback, all right, or a retracement. Now if you see this happening in the market where series of highs and lows are being formed, then it should come. The first thing that needs to come to your mind is that market is in an uptrend. All right, guys. So anytime you see market excuse me, anytime you see market forming series of what, lows and high, it means the market is on what, an uptrend. All right, the market is what, is an uptrend. So we say that demand is in what, is in control. So if you want to understand more on supply and demand, please do well to join the Captain's Mastery course. As I said, they will give you every information you need into details on all this topic. Today I'm just here to teach you a very simple way of trading boom and crash profitably each and every day. Okay, so demand is in what, is in control anytime market is in what, an uptrend. All right, so here we can see that demand is in what, is in control, because we are forming series of what, highs and lows in the market. Now in a downtrend it is opposite. So in a downtrend, supply is in control. All right, why are we saying so? In a downtrend, it is the lows that are hot, are broken, and the hot and the highs are respected. But in an uptrend, the highs are broken and the lows are respected. All right, guys. So in that case, where we have, so let me just demonstrate that quickly. So we are coming down, then we form series of highs and what, lows in the market. All right, where we are out forming series of what, highs and what, lows in the market. Series of highs and lows. So guys, just follow this and watch it step by step. Take your time, watch it, understand the concept very well. This is just part one of the entire series, so you need to understand this concept so that when we continue with the lesson in the future, you will not be what, will not be found wanting. Okay, as I said, this is just a textbook representation of market structure. All right, I think let me use the main trading view so that I can use the main tool, and instead of using broken pieces, then I'll come back here and then we look at some boom and crash pairs, just to show you what I mean in terms of the market structure, in terms of what, the market structure. Okay guys, so just be with me and we will be done now. Meanwhile, if you are new to my channel, do well to subscribe to the channel, and don't forget to turn on the bell notification icon, and also don't forget to leave this video a like and share this video with your friends and family who are willing to also trade in the forex industry. All right guys, okay, so as I was saying, so this was the uptrend scenario. I just needed this tool to use. Okay, it makes the work easier for me. All right, so we have this series of movements in the market. Then on the opposite side, that is, I mean on that of the downtrend, we have it in the opposite direction. Okay, so you have market moving from top to bottom, top to bottom, then to top to bottom to top, and look at what is happening. We are breaking the lows that are being formed in the market. All right, we are breaking the lows that are being formed in the market. What do I mean by that? So let me just use this guy here to show you that. We are breaking the lows, the highs in an uptrend and the lows in what, in a downtrend. Okay guys, I hope you guys are enjoying this video. If you are enjoying this video, do well to leave me a like, leave this video a like. If you have any question, do well to just leave us a comment in the comment section and I will attend to you. Alright guys, I will attend to all your questions, and also you can suggest what you would like me to make video on for you. Alright, after this series you can suggest a topic that you like me to make a series of videos on for you guys. Alright, I'll be glad to do that for you guys. You are my audience and I'm here to give you value. Alright, so this here we are in an uptrend over here, and we are in a downtrend over here because we are moving downwards. Okay guys, alright, so as I said, in a downtrend we break the lows, okay, and the highs are intact. Why do I say they are intact? Because we are not breaking them. Now, what is all these ideas around structure? So structure is just there to help you to know the directional bias of the market at that point in time. Alright, so if you understand the directional bias of the market using structure, market structure, you should be able to trade without fear. You should be able to know when to enter the market in a particular direction and when not to enter the market in a particular direction. As I said, this is kind of a textbook example, so let's look at a more realistic example or illustration. Let me say illustration, a more realistic illustration. Alright guys, so I'm going to remove these drawings, and then let's do a more realistic. So in a more realistic, in an uptrend, you can have this kind of movement. Oh, sorry. So you can have this sort of movement. Okay, can have this sort of movement. Okay, this kind of more realistic. Are you okay? This kind of a more realistic way in which the market behaves. All right, market don't just move in a linear kind of way. You understand? Market tends to move in a zigzag manner. You understand? Now, one thing you need to understand is, I'm just demonstrating how a realistic market looks like. Okay, so now within this we have the main trend, and we have the internal we have the main structure, and we have the internal structure. For instance, if we take this area, okay, if we take this area, this entire area here, from here to here, is a pullback. All right, but then within it you can see the same kind of market structure forming, where we have series of lows, high forming within it. But here the main structure is here. Okay, so within this, where we say this is an internal structure, that structure is a structure formed on the lower time frame that is being depicted on the higher time frame. So we have the structure within. Okay, and then we have the main structure. So here, let's say this H4, you see that this is the main structure where this high is, and you can see this is the point where its low was formed. So we have a low here for this particular pullback. We have a low here for this particular pullback, and if you come here, you can see we have we have this high taken out here, and before this high was taken, you can see how market was behaving before finally breaking through, and you can see where it created this low. So this is how market actually behave. It's not like the first illustration I did where I just put straight lines there, up down. No, that is a textbook example. That's why I call it a textbook illustration. But this is the main market behavior, or this is how market behaves actually. All right, So as I said, this is just part one of the series, so don't worry, you go, don't worry about, oh, he said he wants to take us through and all those stuffs. Okay, so here you can see this high here was also what, taken out. That means structure was what, was broken. All right, and here is its low before market went up, formed this high here, then made a pullback, and then this high here was what, was taken out as well. All right, so this is how market actually behaves. So if we go to the chart, you realize that this is how market what behaves. All right, so what is going to happen is that in this part one, these are the illustrations I've shown you. Okay, I've shown you the illustrations, but then in the next video, okay, which will be the part two, I'm going to show you these things on the chart. Okay, but before we go, let me just quickly show you that of the bearish market. So we can have something like this. You'll be moving down, then we have a movement that is kind of what, a pullback, and then we have this, and we can have this kind of movements in the market before we go down. So market is not just a linear kind of movement. All right, market doesn't just goes in a straight line. All right, so here you can see this is our low in this downtrend. This is our low, was taken out here, and what do we see? Before that, market would pull back in a zigzag, so forming internal structures. Then over here, market pull back and formed what, a low over here. Are you okay? Forms a low over here, then created a new low, pull back, but then those two are hot, equal highs. In the market, you'll be seeing what, a lot of this kind of formation. All right, that means that high was not taken out. They are still in maintenance, but this low was taken out, and this low was formed, also now taken out. Sometimes this low will not be taken out. You see, it will just be equal. This one will be equal with this before that up and M movement. Okay, then if we come here, this was our low that was formed. Okay, so let me say this is an equal low here, so that you see the example it's talking about. All right, so we have those equal lows also over there. Then market went up, and then we have our new high formation over here. So now if you see this in an uptrend, as I said, in a downtrend, as I said, the highs are still intact, but then the lows are being taken. So this particular low like this was taken out here. That was where this structure was broken. So this is how the market looks like in a more realistic way than the first example. And this is just the first part. I don't want to keep this video so lengthy because I want you guys to understand the concept. So I'm just going to keep it this very short, and I'll see you guys in the next part. But don't forget to give this video a like and also share it. And if you are not subscribed to the channel, do well to subscribe. And in today's video, we are going to continue with the part 2 of the boom and crash trading series. Okay, now I'm sorry for not releasing this part as soon as possible because I had to concentrate on my private mentorship students. We were having 2 weeks boot camp, and that took my time, so I'm very sorry for the delay in bringing out this part 2 of the boom and crash training series. Without much ado, if you are new to Mindset Hustle, do well to smash the subscribe button and also turn on the bell notification icon. If you will also find this content valuable, leave us a like, and don't forget to also comment in the comment section below asking us any question about this particular lesson. Let's dive into today's lesson. So welcome back, guys. So in the previous video we talked about market structure, and I demonstrated how market structure look like on the trading platform, okay, using illustrations. Okay, I drew illustrations to show you, but today we are going to look at it on the live chart. Okay, and since this is a boom and crash trading series, okay, I'm going to only work with those pairs. Okay, boom 1000, boom 500, crash 1000, crash 500, crash 300, boom 300. Okay, those are the only pairs you are going to use in this particular series. And if you are not having an account that trades these particular pairs, please do well to click on the link in the description of this video and subscribe with Deriv. Okay, so Deriv are the only broker in the entire world that trades these assets. Okay, so you can only get access to these assets on Deriv broker. Okay, and to create an account with them, please, I'll leave a link in the description of this video. Do well to click on that link and register with them and start trading, so you can practice with demo, and then afterwards you can start live sessions, okay, or live trading. All right, guys, so let's get into it. So if you remember, I said in the previous video that when we come to structure, we have what we call main structure and internal structure. Okay, so here I'm only going to mark the main structures, and then after that I'll show you what I mean by internal structure when we were looking at the illustration the previous time. That's why I gave you two different examples. I call one the textbook example, and I call the other one the reality, okay, or how the thing actually looks on the chart. And if you look at this chart, you see that it doesn't match up with the real life the textbook example. All right, so let's get started. Let me see this boom 500. So as you can see, we are here on this session. Okay, let me just highlight this area from here to that section. You can see market is on an uptrend because we are doing series of highs, low, high, low, high. Okay, so let's mark that. Okay, so using market structure already, I know we are on an uptrend. Okay, and so in this case we are assuming this area here does not exist yet, okay, or has not yet occurred. Okay, you look at that, come back to that side. So this particular moment, let's look at this particular session here. Okay, so I'm going to use my trend line over here. I'll click on it because I don't want to use the horizontal line to from here to that, no. So I'll use the trend line. I'll click on it, and I told you that the highest point, okay, is what you mark, which is the wick here. But then when we are talking about break of structure, I told you that we need the candle's body closing above that high, or if it is in a downtrend, that low. So this time we are looking at what? At a high. Okay, we are looking at what? A high. So we need the candle's body closing above it to give us a what? A break of structure, okay, or a break of what? Market structure, as some people will call it. So this was the high, and this is our low here. Okay, this is our low. This is daily time frame, so we are marking this structure on what? Daily time frame. It's always good to look at structure on daily time frame first, see what daily time frame is doing, because if you are a day trader, you should always know what daily time frame is doing. Then after that, you come down to H4 for your daily directional analysis. Okay, all right, now once this high is broken, and it was broken by this red candle, let me see whether it's a red or the, okay, by this doji, bullish doji here, broke it because the body of that doji, sorry, I said doji, pin bar, that pin bar there, do what? Broke this high. Are you okay? Broke this high over here. So this high is now confirmed. So not this candle, not this big candle, because this candle only wiped liquidity. Okay, the wick here just wipe this liquidity, so we don't call it a structural break if it occur like that. But this guy close above this area, so that is a structural break. So after that, what do we see? A new high was created here. Okay, so I'll mark this high as my new high. All right, so until this high is broken, no structure is created. So okay, a structure can only be created, a new structure can only be created when the old structure is broken. All right, and this particular high created this low, not this. So this and this, okay. All right, I'll talk about it. So let me just move on for now. I'll come back there and talk about that. Okay, now if you really want to really take your trading to the next level, do well to join the Captain's Mastery course. Okay, on our mastery course we give you all the in-depth knowledge that you need to know about the forex market. Okay, I have a lot of my students who are doing well for themselves trading forex. So please, if you want to know more about our mentorship course, do well. I'll leave my contacts in the description of the video. Do well to contact me on Telegram or by email, and I'll attend to you. All right, let's move on. So after this high was breached, what do we see? We created a high here. Okay, I will give you some differences in these things, why I call this a high. Okay, so we created a new high here, and that high created this low, and we'll talk about that later. Okay, so it created this low, and what do we see? This low caused the breach of this high to create a new high here. Now after the creation of this high, price pulled back. It pulled back, but this high was not breached, so this cannot be considered a low. So our last low that was created before the last high, so this becomes automatically our last high. All right, so this low is responsible for this high. Okay, and it is not an equal high, somebody will say. So if you go to the lower time frame, you get kind of like an M formation type of scenario in this region here, where we have this double top formation on the daily time frame. Okay, now as I said in the previous lesson, so if you have not watched the part 1, I will leave a link to the part 1 in the description of this video and also in the card above, so you can click on it and go watch the part 1 so that you understand what we are doing on the chart here. Okay guys, all right, so now let me explain some things before I come down to this area here. Okay, and so here you can see that after this high, this drop between this high and this low, we have what we call internal structure. So I was talking about it in the previous distance. So you can see here price drop up to here, went up, then breached the low, came down, went up, breached this low before creating the major low. So that happened within here. When you go to the lower time frame like H4, H1 and co, these are major structure on those time frame, okay, which you can trade based on those time frames direction at that particular period in time. So this is why we have this internal structure. Okay, so a low, a high, a low, a high, then a low, which gave us the obvious low for this particular short uptrend here. Now let's look at this downtrend, and you can see it's the same thing here. You can see it came down, then up, down, breached, went up, pulled down, breached again. So those are all internal. All this is what internal structure. Okay, and I demonstrated all those things when I was using the illustration the last time, so you can go check it out for yourself before you come back. You can pause this video, go watch that, and then we continue. If you are getting a value from this video, do well to leave us a like on the video and also share it with others so they can also grab this knowledge. All right, so if you come here, I told you guys that market is very let me say obedient to structure. Okay, so in all that you do, always make sure that you trade in the direction of the break in market structure. So if market structure is broken upward, look for a zone that when price pull back towards will go still in the direction of the break in structure. All right, until you see that market has broken structure in the reverse. So that is what happened here. You can see after this last high, our last low that was created there was broken by a candle body close below it. Okay, so and this candle body close is a heavy one. You can see this heavy movement, you understand. So what happened, you can see that price has what, price has broken this particular low. Once that happened, then you should begin to remember the fact that you are supposed to what, trade in the direction of the breaking structure. So all you need to do is to look for what caused this break of structure, and you do that on the lower time frame and even on the higher time frame, but then you don't do your entry on the higher time frame, you do your entry on the lower time frame. So you do your analysis on the higher time frame and you do your entries on the what, on the lower time frame. Okay guys, let me see if this recording is going on. All right, yeah, so we can proceed. All right, so here after the breach, okay, we were expecting price to do what, to at least maybe it you see sometimes price can do what we call deeper retracement, okay, based on maybe weekly zone or a monthly zone. All right, but then if price does not go to breach this last high and price just reject again and break the new low, which is this area here, okay, with the candle body, okay, which occurred using, and that break occurred with what, this red candle here. This red candle is the reason why that structure was what, was broken. Once that happened, this now gives you what, an idea that no, we are now changing from an uptrend to what, a downtrend. Now we formed a low that is what, that is lower than the previous sorry, a high that is what, lower than the previous high, instead of it being what, higher than the previous high, for us to what, to move on in our what, uptrend. Okay, so let's see what did price do. Price breached this low, then what do we see, it came and what, created a new low here and pushed price up. So I told you, you mark the obvious structure. And you know, let me tell you guys something, one thing, because this thing happened to me myself also before, so I can tell you. See, we are not patient. We as traders most of the time are not what, are not patient with the what, with the market. You understand, we are not what, we are not patient with the market. We always want to be in a trade, okay, but if you know what you are doing, always wait for price to always come to you. I remember those days when I'm just jumping to trades, it creates fear in me because I know I didn't do proper confirmation. I just jump into the trade anyhow and I lose a lot of money doing that. Okay, so guys, always mark your chart, okay, get your analysis right and just relax. Even if it takes 2 days for price to come there, as long as you know that you have done the right thing, just wait for what, price to what, to come there, and you can take your trade. Okay guys, so if you like the content, just leave me a like on this video and also don't forget to share the video. This is Mindset Hustle, and we will continue to bring you quality or quality content, okay, educative content. And mind you that forex is not the only content we create on this channel. We create content on money making and also we create content on cryptos. Okay, so you can watch some of our other videos that we release on other topics and make some money for yourself. All right, so here this was the last low that created this high. After it, this high was created, this red candle was responsible for the break of that structure. Okay, please, this is not the main, this guy just only, this is not the one responsible for breaking this particular or this particular low. No, it is not the one responsible. This red candle, this wick, okay, only came to what, to take out what, liquidity. It only came to sweep what, liquidity out over here. All right, so right now what you are going to do is you mark the next low, which is this guy, and that created this high. Okay, so this low or this new structure, call it new structure, is created. This is why I prefer trading view sometimes, but binaries trading view is not serious. It likes fooling. All right, so after that, this is our high that caused the break in this low. Okay, so this high is responsible. Guys, you see the way I took my time to, though this is a free content, I took my time to explain these things to you so that you understand. Okay, there are some other things that I'll not talk about here, otherwise I'll not be fed to my private students, but then I still am giving you almost everything. Okay, so this a big, when it comes to the structure, I'm giving you everything. All right, but when it comes to like other things like entry, maybe that's where you lack some of the things. Okay, because I cannot make those ones. Entry is the most important thing. I cannot make it public here. If you need more information, you can contact us and join our mentorship program. Is at a very cool price. Okay, please do not, a lot of scammers do leave comments, investment comments in the comment section. Please, and please, this is a disclaimer from me, do not fall victim to them. Anybody advertising anything bitcoin investment, mentioning somebody's name to have been good to him or her, please, it's not me. Anybody using my name, check it well, check the channel's name very well, and look at the fake channel names that are commenting under it, so that you will not fall hot victim to them. All right, money is hard to come by. So this structure was broken and we created what, a new low. Okay, it created what, a new low, which is here the last low. Okay, has not been breached yet because this particular guy was not this was the last low before this low, but then because a candle body didn't close below it, we use this as our last low. Okay, and is what you need to know is this is also known as this level, this low is also always known as what, liquidity. Price will surely come and wipe it before, we call it the money area. Okay, liquidity is just an area, so liquidity is just like a fuel that moves the market. Okay, so price always takes out liquidity before it goes. So after this we have our high, our new high here. All right, so if this new high here, okay, for us to know that we are still continuing with our downtrend on the daily time frame, then we wait for this low here to be wiped. Okay, but that doesn't mean you will not be trading. All you know is, as it stands now, the boom 500 is in what, is in a downtrend. Okay, and as I said, most of the other movements here are all internal what, structures, internal structures. So this one, always what you need to do is to first look out for your what, daily structure. After I've gotten your daily structure, so for instance, this is our last daily structural area, this low and this high. So now you come back and you work within this range. Okay, you work within this range. Okay, you work within this range, this particular daily, last daily structural range that has not yet been broken. Okay, so you go to H4 and see what type of structure is forming within this range. Okay, so you can, let's quickly just go to H4 and let's see. So in H4, this is what we are seeing in that area. So let me use my horizontal line to just place it here so I can delete off this guy. So we call this area the previous day low, previous day high, but this one here is not yesterday's side. Last two, sorry, I say day, week. I'm talking about week. Okay, this last 2 weeks of low and this last week's of high. Okay, but last week's low is here. I'm not teaching about liquidity today, so I don't want to confuse you guys by going into details on that. Maybe in another video we'll talk about liquidity. All right, so here on H4 we can see price is what is also, okay, over here we can see price is making what low, high, then this low was taken out by this guy to create this what this new low, and then a high was what was created, and then we breached this low again and we created another what another low here, which push up to create this what this high over here. We put our what our low over here, which has been breached. So right now H4 is what is telling us that we are still in what in a downtrend. But mind you, one thing you need to understand, if you go to the daily time frame, okay, if you come to the daily time frame, we are around what we call a daily time frame demand. Okay, a daily time frame what demand, right? So price has already what mitigated that area. Now you can go onto the lower time frame because this area has already been mitigated. There are some entry confirmations that you can use, like the change of character and all those stuffs. Change of character, you can use change of character, you can use flip, okay, methodology to what to enter on the high on the lower time frame like M15 and co. Okay, so I'm not talking about that now or in this video, so let's just move on. All right, so here, because we are in a higher time frame demand, okay, always the higher time frame zones kind of command the trend. Okay, right now we are in a higher time frame demand. Okay, so if you want to know much about our demand and supply trading, as I said, you can join our mastery course. Okay, and also we have an H4 supply here. Now if this supply intense is respected and we didn't break through this, then we can still trade a sell on what boom what 500. But looking at this area of what demand, which has another daily demand within it, okay, we have another daily demand here within it, which price is already here. I'll use this week, okay, which is also a 4-hour demand area. That week is a 4-hour demand area. There is a reason I use this, and I think my students will understand why I'm using the week here as the demand and not the whole body of the candle. Okay, all right, so now that we are also tapped into what an H4 hot demand zone, you should know that a zone within a zone, okay, if a zone is found within a zone, that zone is what is very strong to push price. So the probability of price breaking through this is high. The probability that we will have a spike going through these zones, okay, breaking supply and creating demands along till we go to this previous high that was created is high. Okay, now to know about all those things, you need to follow and you need to do your structural mark time frame by time frame. Okay, so the 4 major time frames I use, the 3 major time frames I use to do the markups are the daily, the H4 and the M15. Then I use M5 to make entry, M1 to make entry. But those ones, M1 for instance, I use it on VIX and currencies. M1, M2, M3, I use them on VIX and currency. But for boom and crash, I use either M15 or M5 or M10 to do my entry. Then I analyze them on what, D1, H4, sometimes H1. Okay, so that's what you need to know. So here you can also mark out the H4 structural levels, okay, using the same method that I taught you. I don't want to make this video very long, so this is the part 2. I'll see you in the part 3. Okay, I'll see you in the part 3 of this series. So until we meet, if you are new to the channel, subscribe, like this video, press the bell notification icon, and also share the video with your friends so that they can also acquire this knowledge. Don't be greedy, don't keep it to yourself alone. Till we meet again, it's Prof. I'm out.